Welcome everyone to another weekly meetup at StoryTrading. We brought back Bob Ferris, CEO of VTSI. So we're really excited to speak to him tonight about that, about his company. First, a quick disclaimer: StoryTrading is not an investment advisor. Investing in securities involves significant risk of loss. This presentation is being recorded. Parts of it will be available to our VIP members and subsequently published to YouTube. And tonight we're going to do a little bit of a different format. Bob, with your permission. Instead of doing a formal presentation, because we're familiar with you and your company, you've presented us to us before, we're just going to kind of do a conversation, do Q&A back and forth. And if anyone has any questions throughout, just go ahead and put those questions in the chat or raise your hand, and we'll get to you at some point. So I have a series of questions I'm going to go through, and when I'm done, or maybe we'll even intersperse your questions if you have them. I also want to again thank Charlie Schumacher. I don't know if he's here. Oh, I see he just came on from Gateway IR. So thank you again for setting up this call. And let me get, got our co-host Rob Mock on the line too. So with that, Bob, I just want to give a quick, I'm gonna stop the screen share and we can just kind of talk to each other. But quick little background, you guys reported earnings on March 29th. It looked like a really good report. And then I think 2.2 million adjusted EBITDA, 6.6 million on the top line, 14.6 million backlog. And then a couple days later, we did a raise at $6, $18 million came in. So with that, Bob, welcome. And just to start it off, I'd like you to kind of open it up and discuss that offering, how that all happened, how it went down. I know the most popular question you probably have is use of funds, but if you don't mind, maybe on that particular case, particular question, use of funds, let's leave that to the end, because I want to give everyone, background of your company and what's been going on to date, and then we'll talk about use of funds. But I do want to ask about the mechanics of that raise, how that happened. There was extraordinarily high volume that day. It's just interesting that, the stock is trading below $6. So, one of the things I wonder is, do you know who participated in this offering? Are they long-term holders? Was it more of an opportunistic thing, the transactional thing, where they may have shorted, that huge volume and came in? So if you just open it, talk about that a little bit. We appreciate that.
Well, first, thanks so much for having me back. Really appreciate it. Thanks, Ben, for that opening question, and also appreciate the fact that last time you had me on, we were $4.05, and now today, this time we're $5.05. So exactly $1 increase in stock price for a $4 stock. I'm sure that's completely attributed to my speaking with you this Sunday evening a few weeks ago. So, but no, seriously, thank you for having me back. So a little background on that raise. So if you look back at Virta's history, I've spent many years explaining what we do and talking to investors. And during that time, I would have once in a while institutions say, you know what, we're really interested in your story, but we don't buy stock on the open market. If you ever want to raise capital, give us a call, let us know. And we and that was many times years ago, 5-6 years sometimes, where we had people tell us that, and then they continued to follow the story of Virta and the progress we made. And so we had a series of groups that had expressed interest if the timing was right for the company, and they just had basically been waiting on the sidelines for years and years. And the volume got for our company what I would just term as insane. I think there's over $1 billion of trading activity in Virta stock around that time. And but yeah, instead of going to groups that might be brand new to the Virta story, we went to the groups that had many years of watching Virta grow and develop, and we think that bodes better for long-term prospects. So the mechanics of it was 3 large institutions that each split it equally So everyone was equal weighted in the raise. So.
Oh, that's great background info. And do you know, do they intend, or I don't know if this is something I tell you or whatever you may know, but do they intend on holding this as a longer term investment? Do you know anything about that?
There's, since it's not restricted stock, there's no legal obligation. But some of the folks that are involved, I do think have very long-term vision for this company, and they've waited a long time to be involved. So I do feel some of them are much more interested in the future than the present. And obviously, if you pay $6 a share and the shares are trading at 505, doesn't do you a whole lot of good to exit that trade unless, and especially if you feel the stock is going to go up in the future. So, but no, we don't. I'm not privy to the trading activity of those who were involved in the fundraise.
Okay, great. Awesome. Nice way to kick that off. And I'll circle back and we'll touch on use of funds if you're willing to tell us anything about that. But just want to go back and talk a little bit about the company. I want to talk about first the sales, pipeline, backlog. One of the very interesting things about this quarter was there were no press releases that I remember about any contract wins. And I think you even highlighted this in your prepared remarks. Yet you had a really good quarter in terms of revenue. So where's that revenue coming from? And is there a pipeline of new customers? Because to me, it's a little bit surprising we don't see more regular PRs. What are you getting wins or just too small to PR? Just a better understanding of where we are with that pipeline and the backlog and what you PR, what you don't.
Yeah, certainly a great question, and our PR volume is definitely not hinged with our performance. If we have a bunch of PRs, that doesn't necessarily mean that we're going to have a blowout quarter. I think people who've been watching the stock for a while know that it's not a direct relationship. But I do think that this time was possibly a bit of a breakthrough for the company, because we didn't have even one large win, which if you look at our PR track record, single wins over $500,000, and that's not a hard and fact rule we've had, but generally we don't PR a lot of things below that unless it has strategic importance. And that's not, like I said, that's not a hard and fast rule. But if you look through our history, you notice a trend. We're not PRing a $110,000 win, even though those add up when you've got a whole bunch of them. I think it was a breakthrough in that it shows that our sales pipeline is very healthy, that we're doing we're getting just regular sales in a steady flow, and that we're closing those sales. So I think that's a very healthy and frankly and appropriate at this stage in our growth, that we would enter that phase as a company. But realize when it comes to PR, we only do PRs if the customer doesn't object, if it doesn't hurt us from a competitive landscape analysis, and if the news is particularly meaningful. So we have to, PRs do go through those filters, and there are times when a PR will come through, but that might be something that's been 2 or 3 or 4 years in the making, because we don't want to PR items too early in the process and then fall victim to competitors getting word of what we're up to. So there is some intentionality when it comes to holding back possibly certain things that are ongoing behind the scenes of the company, but it's for the shareholder value long term, doesn't make sense to put a PR out.
So it sounds like you're not yet, or at least you haven't had any particularly large deals of over $500,000 that would fall into that category. So what's a typical deal look like for you? I guess your customer's a police department, right, for the most part. So like what size police department? What's the size of the contract?
So it ranges. For purchase deals, it can be 6 digits or above. For our step program, it can be as little as $1,000 a month for our, or less for our step program. That's our subscription-based program for simulation training. So it varies. But overall, you know, we were really happy with our results for 2020. The market seemed very happy with those results, and you know, we were kind of awestruck by the reaction of that, and in the ensuing days, and it was a real compliment that and showed that quite a few people are following the stock and actually decide if we perform as a company and we post the results, which is kind of more important in a lot of ways than what we say is what we do. And what we do is most evident when we're able to post our results. And also, I don't want everyone to forget, you know, what we do is most evident when our products are used to train people at the highest level with today's technology.
Okay, so can you give us a little taste of the future in terms of what's coming into your sales pipeline? Any color you can give, you know, number of leads, the size, you know, are they getting bigger? Are they not getting bigger? You know, any kind of color to give us, because I'm trying to connect the dots with what we're seeing in the news in the last, whatever, 18 months with the riots and stuff. And, you know, I harken back to a time when I used to invest in Taser, when there were maybe 10, 11 years ago, when there were another series of social unrest and riots, and they were getting into the body cameras with Axon. And there seemed to be a very direct correlation between what was happening in the news and that company PRing, hey, this police department getting the body cameras. A week later, another police department getting the body cameras. And you know, it just seemed to match up with the momentum of what was happening politically in the country. So I'm a little bit surprised that we're not seeing like rapid PRs, that's quite honest, with like just showing momentum of police departments, you know, getting your product here. So do you see any evidence of that in your pipeline? Do you see momentum that's kind of matching what we're seeing in the news?
Well, if you look at the results that we just posted for 2020, and you look at backlog and increase, and you look at recognized revenue, which both went up. Recognized revenue just inched up, but that was kind of amazing considering the COVID background on the year. But when you look at those, if you combine those, you know, that's nearly approaching 20% year-over-year growth. That's really solid in this market space, I think. And so I do think you're seeing some evidence that there is potentially more macro interest in high-end simulation, effective training, that is getting pushed. Now, whether it's being pushed by the narrative of a certain officer made a bad decision, and then that has a ripple effect of people saying, well, gosh, we better invest in good quality training to try to avoid anyone else making a bad decision like that. You know, that's a logical flow. On the last time we talked, I hesitated to say that, you know, it's simply headline news about police decisions automatically mean that we have extra orders come in that day. It's not quite a relationship like that, but I certainly think that the logic still follows that if our society cares more about the quality of decision making that officers make, then they should care about quality training for them, rather than purely investing in being able to videotape, you know, to video what they're doing and then judge them later. It's far superior to help them avoid the situation in the first place through improved training, stress-induced training where they have stress during their training. Otherwise, it's often considered a joke. And then also certified training, this, you know, having the training actually be nationally or internationally certified. But if you don't have stress while you're training, you're really not learning at a level that you absorb that information and you inoculate yourself in the future towards very serious traumatic situations that you can perform at a high level at. It's just the reality is you have to, if you want to perform at a high level, you have to train at a high level.
Yeah, I couldn't agree with you more, and I really think there are really strong political and societal tailwinds here that would almost compel every police department that has the funds to pursue something like this. So can you give a little insight on that sales cycle? You get an inquiry. How long does it kind of take to close a deal, and what's your follow up there? Meaning, like, what deals might you lose to competition? I looked in your 10K and I saw you listed about 6 different companies here: Rotec, Cubic, Laser Shop, Megit Training Systems, and Thai Training Corp. So how's that process look when you get that phone call and you get that initial lead into that sales pipeline, and you're competing with these other players? Just give us a little more insight on how that works out for you.
So there's a range there. Sometimes the person calls in and they already know that really we have the capacity to handle their needs. So when it comes to police training, we have more staff, more money invested than any other company. So there's that issue, and many times there's certain clients that simply they need to use a Virta or similar type company to handle a larger requirement. But there's also the reality that our competition it just many times doesn't have a competing product to what we offer. So if you actually checked out and tried their product and then immediately tried our product, it's just a real night and day comparison. And so the real issue we have is really apathy. It's those departments that are currently not doing any type of experiential training, any type of certified training like that. And those are the departments that we really need to reach, and we really need to help them come up to the current kind of this, like hospitals have a standard of care, police departments have a standard of training, and there's certain ones that have fallen far behind where they should be, and it can lead to much more tragedies like we've seen in the headlines due to a lack of training. So sometimes it really comes down to that difference between a really great outcome and a really terrible outcome is sometimes the spread of the amount of training and the quality of training and the amount of experience, whether real experience or training-based experience that the officer has at their disposal.
Okay, great. All right, now I'm going to get into a few questions that's going to really lead up into the future and use of funds. But now you raise this big money, so I'm starting to think bigger, right? Like, what can we do to really make this company large? So it just dawned upon me that I was going through your products and I saw that you have a TASER training program, one of the services you sell. And it just dawned upon me that man, Axon has like the perfect sales channel for you guys. And I'm wondering if I just want to know what that relationship is there. That program, that TASER training program, is that something you're doing with their authorization? And have you ever considered partnering with a company like them or someone else in terms of utilizing their sales channels?
So, I don't want to speak on behalf of Axon, so I really can't. I can speak on my opinion as Bob Ferris on this. You make some good observations there. From what I've observed, Axon has a lot of their own plans, and their plans are very much centered around eliminating firearms and bullets from society, and really finding ways to not have to use bullets. So they do things like focus on training for different things that don't involve firearms. So Virta is a bit different in that we actually put them in the experience and then give them all of their tools. We do not want someone to confuse a TASER for a firearm ever again. And the way you make sure and not do that is you train with both, and you learn to deal with both. If you're going to have both of those tools, you need to train with both of those tools. So that's that view. And so we are not really in many ways direct competitors. but we've we certainly, as of today, there is no cross marketing or cross sales between two high-tech police companies like Axon and Virta working in unison into the market.
Okay, but that program you have, is that something that you put together with them, or did you need their permission to do that? How'd that come about?
I can say that we communicated and worked with Axon where we needed to, and then we did our own work. We applied for a patent for part of the technology that we developed around that, and so that product is not endorsed by Axon. It's not sponsored by them. It's really a Virta simulation training device that allows someone to quickly gain skills with a taser and various models taser in stressful real life situations, including our other simulation technology like our shoot back capability, our electronic threat fire system.
Okay, I got that. Thanks for that clarity. So moving a little bit to the financials, you mentioned, and we can see historically that revenue has been kind of lumpy with your company. So I wanted to get a better sense of, your hardware versus software sales, and if you have any recurring revenue in there, what kind of factors go into making that lumpy revenue, and potentially could that be changing in the future?
Sure. I'm fundamentally, and I'll just talk to the sales side for a moment and not the subscription recurring revenue side, but if we sell a product, then they get that hardware, they enter our ecosystem where everything we have is compatible with that hardware essentially. And now when they buy that hardware, the key reason they buy the hardware at all is because it includes hundreds of thousands, millions of lines of code that we've developed over many years. It includes all of the content, the excellent training capabilities that involve a lot of experts, and just has really valid training. Once these instructors go through it, they understand what value that it can bring to trainees. And so the software piece is obviously a huge part of the value that we're bringing. And so because of the software and because it's a specialty item, people aren't contacting us and saying, hey, I'm going to buy a computer from you and a projector from you, or they're getting a simulator system. So, and I think that's why people who look at us as a simulator, as a hardware maker, they're like, how in the world do you have good profit margins if you're a hardware maker? Well, we're a hybrid. We have some custom hardware. We use some off-the-shelf hardware. So we do use computers, we use projectors, standard cables, but we also have these specialty hardware systems, which are like drop-in recoil kits that allow you to take a firearm, swap out some parts, and then use that firearm in a training simulator. And those are, very unique, and a lot of that's patented technology. And so we have some specialty hardware and we have some specialty software, and we have specialty content. And so it's, we're hitting all of these different things. And like I said last time, it's sort of like the Apple ecosystem, except this is for governments, and this is for a very topical thing, which is how do I train people to better de-escalate the situation? How do I train people to make the best decisions to avoid the tragedy of a wrongful death situation?
I got that. Can you give a little more color into that hardware versus software revenue breakdown? Like what percent is software, what percent is hardware?
So we don't break that down. We don't break that down financially, nor do we don't break that down in our schedules for pricing for customers. So it's lumped together, and then they often will decide what size hardware that they're interested in, right? So we have, for those with small spaces or small budgets, we have a one screen simulator, And then those with larger spaces, larger budgets, we have a 5-screen 300-degree simulator.
I got it. Can you maybe then give us a little color on the business model here? Are you trying to like break even on the hardware and make money on the software, or is it a loss leader? Like, what's the logic behind how you're making money here between the hardware and software?
Well, yeah. So we just price it to be competitive, to be a good value for the customer with what we're providing. And we don't want to race to the bottom and discount our equipment. To we will pass on sales if we absolutely have to. We don't think that's healthy for the market or good for the quality of the end product to try to sell at cost or try to sell below cost. So our philosophy is that a healthy ecosystem for the market we're in is to have a fair price, have an excellent quality product, stand behind it, and then have referrals recommend us to the people that they serve with and the people that they trust their lives to many times. And if you're being referred to at that level, then you're going to be successful. And that's the vision that Virta has, is to be hands down the leader in simulation training and wherever we exist, whether that be firearm simulation, decision making, marksmanship, driving simulation. We want to be the very best in the world.
I think you mentioned earlier in the chat here something about recurring revenue.
Yes.
Can you tell us a little more about that?
So yeah, I mean, recurring revenue is fantastic, and fortunately we have some of it. The way that we have recurring revenue is, first of all, when they buy, what could be $120,000, and if they buy a lot of them, it can be in the millions. But when they buy a simulator, they then want to keep that simulator operating. They want to maintain it. They want to add new content to it. And so then they often want to expand into extra weapons. And so there's a recurring revenue from that initial investment of just being smart about putting a good money after good to keep that operating, to make sure that they're training. So there's a recurring revenue component in that. And so our backlog has a recurring revenue component in it. I don't believe it's explicitly broken out, but it is there.
Is that like some sort of subscription model that some of your clients pay for fresh content? Is that?
Yeah, essentially it is in a way. So the first year warranty is included, and then we have clients who buy extra years. Some clients want custom content developed, so that's a recurring revenue. Sometimes they do that every year. They want new content because their policies change, so they need new content to keep current with their policies. And then we introduced about 2 years ago something called a STEP, which is a subscription model in which we will take monthly, quarterly, or an annual payment, and it's essentially renting the equipment. And so they get access to training, which many times our clients, they don't necessarily want a simulator. They want what a simulator provides them. They want better trained officers. They want great decision makers. They want people that won't freeze up when in stressful situations. They want the end result of what our equipment can help provide. And so with STEP, we just go straight to that, and they get and so all of their service and support is included. Their content updates are included. So that's a pure subscription model where they're just paying us a fee, and then at the end of the year, if they can it'll auto renew or they can cancel. And so far we've had 100% of renewals on that subscription model. 100%. Not.
Oh, that's great.
Now that's not, we're in a good number of those, and as that number continues to increase, that no subscription company has been perfect 100% as they scale. So, but we're at a point where I think it would impress a lot of people who are very deep into the subscription model would be rather impressed with our performance on that model right now.
And how long have you had that product out for?
It's been out about 2 years.
Okay. And are you able to tell us anything in terms of the proportion of your revenue that's from the subscription model?
Not at this time.
Okay. Or the direction, the trend? Are we growing that or?
Yeah, that has been steadily, due to the fact that that no one is leaving it. So every new customer that comes on to it is staying. It's right now a beautiful trajectory upward. But again, eventually someone might actually stop it just so they can go and decide to buy our simulator, and that's fine too. So but yeah, but so far it's been customers have been have been satisfied to the point of showing it with their money.
And do you have a particular strategy longer term of a certain kind of goal you want to reach in terms of percentage of revenue coming from subscription? Is that a priority?
We do. We do have internal goals and metrics that we monitor closely. I would say that our view has been, our subscription model is there to help out clients that have a hard time getting a hold of our product another way. We still believe that. We are not forcing the subscription model onto the market, but we are offering it, and so we still see that as the best way forward. It is a very customer friendly way forward, and we really think that has good long-term potential for us.
Great. Okay, so with that, I'm going to get to the $1 million question that I know people are bombarding you with. So now that you raised this $18 million, tell us why and what you plan to do with that. And yeah.
I mean, it's really pretty simple. It comes down to, we think that our prospects for growth and greater success are higher with those funds being available to us. So, having that kind of cash available puts us in a better position to take advantage of all kinds of unique opportunities. And again, our PR policy is that we don't discuss it until it's done, and we don't want to give out information while it's still in process. So
got it.
We're excited about what the future holds for our company. We think having those resources will be very valuable to our company, but at this point, we're not specifically outlining how each dollar is being spent.
That's fine. Can you give an example though of where you were at a disadvantage not having that money? Like what kind of, just walk through the mechanics maybe of a sales cycle a little bit, and oh gosh darn it, we couldn't get this deal because we didn't have money, and just so we can have a better understanding of why the money could be helpful.
Well, I can walk through some pretty logical examples. We've had situations where we've looked at, and again, don't read too much into this. These examples are going to get overanalyzed, I'm afraid, but I'll put them out there just to give for an example. When you're looking to acquire a company, there is a big difference between having the cash available and having a plan to go raise cash. One is more already a done deal, and the other involves risks and analysis. And when you're in a competitive process, that sometimes will put you behind the line, and you may not. And in certain situations, you need to be at the front of the line, not the back of the line. Other situations where you're working on a very large sale in government spaces, sometimes having a larger balance sheet allows for agencies to feel more confident about larger sales. And so there's that issue where, and that gets into the much larger type sales where they're looking to place if they're going to place a very large order, they want to see a balance sheet and capabilities, production capabilities that can fulfill that. So those are just a couple. I mean, there's a lot more examples, and I don't want the world to say, okay, that Bob's just explained what they're going to use the funds for, or what is on the horizon for the company. But I think those are some good examples that I think most people in business would say are do correspond to the value of having a large balance sheet.
So would you say this raise puts you in a position to possibly secure, sometime in the future, a deal, a deal that's much larger than you've ever had before, like in a different level? Is that what I'm hearing, that's possible now?
It very much could be possible. That would not surprise me. Essentially, we're hoping to generate better growth, better success with having those funds available.
And would a larger deal just be like a larger police department, or are we talking about a new kind of addressable market here? As far as I understand, correct me if but maybe I'm missing. I don't know. Do you do military as well, or is it just police departments?
We do. We do sell to military and police departments, federal police, local police, international police, and all branches of the military, international militaries. We sell through all of them. To answer your question, is it too much to ask to have all three, to have this help us with all three?
Okay, great. All right, that is, well, let me just ask this one final, I may have just asked it, but let me be a little more direct. Do you see the total addressable market for you guys? Well, do you have a number in mind? What is the total addressable market that you're going after? And has that changed at all? With this new money you have, you're like, okay, now it's a bigger market we're after.
So yeah, raising this money could absolutely impact our total addressable market in various ways. Obviously, if we did any acquisition with it, if we did any new products, that can all impact our total addressable market. So absolutely, that could be an impact of having that cash available.
Okay, excellent. Thank you so much. We have some questions from our audience. The Q&A from here, anyone who participates, it's not going to go on social media, so you don't need to be shy about that. Great, thank you, Bob, so much for your time tonight. As usual, it was a great conversation with you. We're going to follow your progress, wish you the best of success, and hope we'll have you back on here at some point in the future.
All right, thank you so much. Really appreciate the time and everyone's great questions. Thank you.
Great, thank you. And as a reminder, we do have that VTSI research group available. We'll be dropping that link in the VIP room if you're not in there already, so we can continue collaborating on that. And once again, you can go to StoryTrading.com, click on performance, and you can see the performance of the VIP picks, including VTSI there, which actually Bob mentioned was 405, up 25% since that was originally presented over here. And one other thing, our events, we will be getting to Trade of the Week in just a moment, but next week we have Greg Fisher. We're going to do a deep dive into Mace. We will also have our happy hour this coming Wednesday, so we'll put that on the schedule. So Mace has been up pretty sharply since it was presented just a short time ago, so we'll be going back into Mace to see if it's still a good purchase at this time. Make sure to follow us on YouTube and Twitter, everybody. And we will now move to Trade of the Week, and we'll stop the recording. Thank you.